The last date for filing income tax returns for the financial year 2021-22 is over. More than 5.8 crore ITRs have been filed till 31st July. But there are many people who are not able to file ITR due to various reasons. Though you still have a chance to file your return even after the deadline of 31st July has passed, in the US it is called delayed return or belated return. But for the late filing of returns after 31st July, you have to pay a price. So, what is delayed return? Under Section 139, Subsection 4 of the Income Tax Act 1961, filing of income tax return after the due date is called a delayed return. Delayed return filed up to 3 months before the end of the current assessment year or the completion of the assessment year can be filed till 31st December 2022 for the financial year 2021-22 or assessment year 2022-23. That is, the taxpayer has 5 months to file it. What is the penalty for delayed ITR filing? As per the income tax rules, any taxpayer who has not filed return till 31st July can file a late return by paying a late fee. Income above 5 lakh rupees will attract a late fee of 5,000 rupees, while a small taxpayer whose income is less than 5 lakh rupees, the fine will not exceed 1,000 rupees. So what does the tax expert suggest? Tax expert Satendra Jain explains that the taxpayer should file the income tax return on time. If you have incurred any capital loss which you want to carry forward, then you can file the return before the deadline and correct the paper later and file a revised return. What are the disadvantages of ITR filing after deadline? While filing returns after the deadline, the taxpayer not only has to pay a penalty but also loses many benefits under the income tax laws. First, if a taxpayer is not able to file income tax return by the deadline and files a delayed return, then the loss, except house property loss, will not be allowed to be carried forward to the following years. These losses can be carried forward till 8 years. Then, on timely filing of ITR, the taxpayer gets interest at the rate of 0.5% per month on the refund amount. If someone files returns in September, then he will not get interest for 2 months, that is August and September. 3. If there is any kind of tax liability while filing delayed return, then interest will be charged as penalty. On the basis of what kind of tax is due, penal interest is charged under Section 234A, 234B and 234C. Failure to pay self-assessment tax before 31st July attracts penalty under Section 234A. Similarly, failure to pay 90% of advance tax before 31st March attracts penalty under Section 234B. Every month penal interest is charged at the rate of 1%. 4. Refund comes late on delayed return filing. If your tax refund is generated, it will be available only if the return is verified after filing. Delay in ITR filing will result in delay in processing and refund will arrive late. And lastly, after filing the delayed return, if any discrepancy is detected, the taxpayer can revise the delayed ITR. However, the last date for filing both delayed and revised returns for the assessment year 2022-23 is 31st December. You will not be able to file a revised return for late return filed at the last minute. Also, there will be no option to choose a new tax regime for late return filing.